Ladies and gentlemen, good day and welcome to Hindalco Industries Q3 of FY21 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Subir Sen from Investor Relations of Hindalco. Thank you, and over to you, sir.
Thank you, and a very good evening or morning, everyone. I hope you all are safe and in good health. On behalf of Hindalco Industries, I welcome you all to this earnings call for the third quarter of FY21. On this call, we will refer to the Q3 investor presentation available on our company's website. Some of the information on this call may be forward-looking in nature and is covered by the safe harbor language on slide number 2 of the Q3 earnings presentation. In this presentation, we have covered the key highlights of all our businesses for the third quarter and the financial year 21, and a segment-wise comparative financial analysis of India and our overseas subsidiary, Novelis. All the prior period numbers have been regrouped and reclassified as per the Ind AS. On today's call, we have with us from Hindalco, Mr. Satish Pai, our Managing Director, Mr. Praveen Maheshwari, our Chief Financial Officer and CEO of Copper Business. From Novelis' management, we have Mr. Steve Fisher, President and CEO, Mr. Dev Ahuja, Chief Financial Officer for Novelis. I will now hand over the call to Mr. Pai for his opening remarks. Thank you, and over to you, sir.
Yeah, thank you, Subir. Very good afternoon and morning to all of you. So let's start from slide 5. Here are some key highlights of the businesses for the third quarter FY21 versus the corresponding quarter of last year. Hindalco delivered an excellent performance in Q3 across all businesses backed by strong macros and a sharp recovery in all the relevant markets. The results were driven by strong performance by Novelis and the India aluminium business, supported by higher volumes, better product mix, lower input cost, stability in operations, and cost-saving actions. Novelis recorded an all-time high quarterly shipment of 933 KT, up 17% year-on-year, driven by strong demand across product end markets. Novelis also achieved an all-time high EBITDA of 501 million, up 46% on the back of higher volumes and improved margins. EBITDA per ton was also at a record high of $537 per ton in Q3 of FY21, up 25% year-on-year. Net income from continuing operations was at 195 million, up 82% year-on-year, while net income excluding special items stood at a record high of 209 million, up 58% year-on-year in Q3 FY21. The Aleris integration work continues with 54 million annualized run rate combination cost synergies already achieved till Q3 FY21, with a potential of 120 million in combinational synergies to come. Coming on to Hindalco's India aluminium business performance in Q3, business EBITDA for Hindalco India aluminium was up 27% year-on-year at 1,323 crores compared to the same quarter of the previous year on account of favorable macros and lower input costs. The EBITDA margin was at a healthy 25%, up 593 basis points year-on-year, which continues to be one of the best in the industry. Metal sales were lower at 315 KT in Q3 FY21 compared to Q3 FY20, but were higher by 4% sequentially. Value-added product sales were at 80 KT in Q3 FY21, up 7% on a year-on-year basis, but grew sharply by 28% on a sequential basis, with the continued revival of the domestic market in Q3. Our thrust on operational efficiency supported by lower input costs continues to help in keeping the cost of production low. The Utkal expansion project of 500 KT is expected to be commissioned at the end of Q1 of FY22. Turning to the quarterly performance of the copper business on slide number 6, cathode production was low at 51 KT in Q3 FY21 due to planned maintenance shutdown in one of the smelters. The CC rod sales were up at 65 KT, up 12% year-on-year, although metal sales were lower at 73 KT in Q3 FY21. The copper business recorded its highest ever fertilizer sales volume at 156 KT, up 135% year-on-year on the back of robust demand. Copper EBITDA in Q3 FY21 was at 202 crores. Coming to the quarterly consolidated performance for the quarter, Hindalco reported a standout performance across businesses by leveraging market demand, strong operational efficiencies and improved macros. Hindalco's consolidated business EBITDA was up 40% year-on-year at 5,242 crores compared to 3,733 crores in Q3 FY20. PBT for continuing operations before exceptional and special items was up 77% year-on-year at 3,153 crores in Q3 FY21. The consolidated PAT for continuing operations before tax affected exceptional and special items was up by 74% year-on-year at 2,166 crores in Q3 FY21 versus 1,247 crores in the corresponding quarter of the last year. Hindalco continues to maintain its strong liquidity and cash position with a total liquidity of $2.4 billion and a cash of $1.16 billion in Novelis and 9,560 crores in India at the end of December 2020. The consolidated net debt is down by 8,500 crores from 30th June 20, resulting in a significant improvement in the consolidated net debt to EBITDA to 3.09 times at the end of December 20 from a peak of 3.83 at the end of June 30, 2020. I'm happy to announce that Hindalco has been recognized as the world's most sustainable aluminium company in the Dow Jones Sustainability Index DJSI and in its S&P Global CSA score. Furthermore, the company's rating in the MSCI index has improved to BBB from the earlier BB rating, an affirmation of our sustainability approach and initiatives. Turning to the broader economic environment in slide 8. The IMF expects the global growth to rebound to 5.5% in calendar year 21 and 4.2% in calendar year 22 amidst hopes of a vaccine-powered strengthening of economic activity, especially in the second half of calendar year 21. Except for China, where the calendar year 20 growth was a positive 2.3%, the GDP in most advanced and emerging economies is expected to contract in calendar year 20. A strong fiscal stimulus under the new administration is expected to drive the US economic growth in calendar year 21, 5.1% year-on-year, faster than other advanced economies. Strength and speed of global economic recovery is expected to vary across countries and sectors depending on the extent of policy support, health sector interventions, and structural reforms undertaken by policymakers. Vaccine deployment and controlling the spread of the pandemic remains immediate policy priorities. However, facilitating the investment cycle will be the key policy focus in the second half of calendar year 21 to ensure sustainable growth. A second wave, new variants of the viruses, and rising government debts remain a concern. On the domestic front, the worst is behind us with a sharp slump in economic activity in H1 financial year 21. Growth in H2 FY21 has been supported by the government's fiscal stimulus measures as well as an expansionary monetary policy. The Government of India's Economic Survey of FY21 projects a V-shaped recovery with 11% real GDP growth in FY22, 6.5% in FY23 and 7% in FY24, on a contracted base of a 7.7 negative in FY21. This translates into a 2.4% growth over the absolute levels of FY20, in line with the latest IMF projections. Growth is expected to be uneven across sectors as industries like travel, tourism and hospitality are recovering only gradually. Consumption-driven growth and rural economy resilience will continue to drive GDP growth initially, with investments only recovering later. An expansionary budget unveiled by the Finance Ministry is likely to boost growth through a multiplier effect. The infrastructure boost and financial sector reforms are expected to provide much needed impetus to growth. However, the execution of major infra projects meeting disinvestment and monetization targets will be a key. The fiscal deficit as a percentage of GDP is expected at 9.5% for FY21 and pegged at 6.8 for FY22, as per the Finance Minister's budget speech, with a glide path to fiscal consolidation by FY26 with fiscal deficit expected at 4.5%. Let me now take you through the aluminium industry overview on slides 9 and 10. In terms of global production, world grew by 2% to 65 million tons, leading by a 4% increase in Chinese production, while the rest of the world was flattish. Consequently, while China is in a deficit of a little over 0.9 million tons, the rest of the world has a surplus of about 3.5 million tons. In calendar year 20, the global consumption declined by around 4% to 62 million tons because of the contraction of demand of nearly 13% in the world ex-China, partially offset by a Chinese growth of 4%. Hence, there was an overall surplus of 2.6 million tons. It must be noted that though the overall surplus is 2.6 million tons, nearly 80% of this surplus came in Q1 of calendar year 20. In the background of strong physical measures to the tune of 12% of world GDP, the economic sentiments were lifted and the global surplus narrowed over the year. In Q4 of calendar year 20, the world overall saw a growth of 5% each in production and consumption, and hence a very small surplus of 0.1 million tons. The world excluding China, consumption saw a strong recovery in demand and has reached pre-COVID levels. For instance, in the US, growing housing starts or new residential constructions grew by nearly 13% in November 20, boosting the demand for building and construction sector. The production was flattish, leading to a marginal surplus of 0.3 million tons. In China, strong automotive and real estate market supported aluminium consumption that grew by around 9% year-on-year at 9.8 million tons. The production also grew sharply by 9% year-on-year to 9.6 million tons, leading to a deficit of approximately 0.2 million tons in the Q4 of calendar year 20. Aluminium prices recovered sharply by 27% to $1,912 a ton from an average of $1,497 a ton in Q2 calendar year 20. In January 2020, the global aluminium prices continued to hold at over $2,000 per ton. Coming to slide 10, the domestic industry in Q3 FY21 is estimated to reach pre-COVID levels of Q1 and Q2 of FY20 on the back of strong recovery in transport and consumer durables. The import of scrap particularly witnessed sharp growth of 31%, while imports excluding scrap degrew marginally. We estimate the domestic producer sales grew by 6% year-on-year. The government stimulus package of 27 lakh crores, which is 13% of the GDP, is a strong thrust on infrastructure, housing and manufacturing sectors, thereby supporting economic sentiment. Automotive sales is likely to grow with the recent announcement of the vehicle scrappage policy by the government in the Union Budget FY21-22. Packaging demand has continued to remain robust in line with growth in the pharma and flexible packaging segments. We are also observing some signs of recovery in demand in the electrical and power, building and construction sectors. Overall, we believe that domestic aluminium demand should continue to surpass pre-COVID levels in Q4 of FY21. Moving to slide 11, the global FRP demand is expected to grow about 7% in calendar year 21 versus a contraction of around 6% in calendar year 20 on account of recovery in demand and of the base effect. Industries like beverage and food packaging, pharma will lead this demand for flat roll products in the coming years. We believe that the positive global demand trajectory for aluminium products will not be significantly impacted by COVID in the long term. Similarly, with the exception of aerospace, our short-term one-year outlooks across end markets remains positive. You must have gone through the details of the segment-wise and market outlooks in the Novelis presentation. I will quickly refresh some specific end market outlooks for calendar year 21. Beverage can continues to show its resiliency in economic cycles, and we see the benefits from higher at-home consumption that favors a package mix shift towards increased demand for sustainable aluminum cans. The overall market demand for beverage can sheet is estimated to grow by approximately 6% in calendar year 21. Novelis is already operating near to its full capacity in can sheet to cater to this growing market demand. In the automotive market, with OEMs focusing on sustainability and consumers adopting electrical vehicles, there is an increased demand for aluminum in this segment across regions. The pandemic has triggered a desire for safer personal mobility, and there is a shift towards vehicle types which use a higher share of aluminum, such as SUVs, trucks, and electric vehicles. This segment is estimated to grow between 25 to 30% in calendar year 21 due to the base effect and continued revival of demand. The demand for premium aerospace sheet from OEMs is expected to remain muted through the first half of this calendar year due to lower consumer air travel. As travel picks up, it should drive the demand for FRP in the aerospace segment. Demand in aerospace is expected to grow in the range of 5 to 6% in calendar year 21, depending on the revival in the industry in the latter part of the year as air travel normalizes. In India, the FRP demand in Q3 FY21 is estimated to reach pre-COVID levels of Q1 or Q2 FY20, as the demand revives in major segments like consumer durables that are supported by increasing penetration of e-commerce sales and BNC demand that is expected to reach pre-COVID levels by Q4 FY21. Stable demand from the pharma and food packaging industries coupled with the auto sector is helping towards a quick recovery in this sector. Turning to the copper industry globally on slide 12, global refined copper consumption declined by 3.3% in CY20 compared to CY19. China has fully recovered from the COVID-19 impact and grew by 2%, whereas the world ex-China, still recovering from COVID, contracted by 9% compared to CY19 levels. In Q4 CY20, global refined copper consumption recovered to pre-COVID levels and grew by 1% to 6 million tons. This recovery was driven by China, which saw an upturn of 6%, whereas consumption in the rest of the world contracted by 5% year-on-year in Q4 calendar year 20. Mines output remained impacted, resulting in short supply of copper concentrate. The benchmark TCRC for CY20 settled at 59.5/5.95, lower by 4% compared to the CY19 benchmark. Spot TCRCs too remained stretched during the quarter. Coming to slide 13, on the domestic side of the copper industry, the refined copper market in Q3 FY21 was at 166 KT, reaching 85% of the Q3 FY20 levels of 192 KT, as major copper consuming sectors recovered post lifting of the lockdown, leading to the resumption of industrial activities. Post CVD imposition of imports from ASEAN countries, market share of imports has continued to decrease to 35% in Q3 FY21 compared to 51% during the same quarter last year. Praveen will take you through the performance highlights of each of the businesses during the quarter 3.
Thanks, Satish. In this part of the presentation, I shall take you through the operational and financial performance of each of our businesses. Starting with Novelis on slides 16 and 17, Novelis clocked a stellar performance on all fronts for both their existing business as well as acquired business of LRS. Driven by excellent operational performance, favorable macro environment, and focus on achieving synergies, Novelis achieved record operational financial results on almost all parameters. we are doing equally well on the various ongoing projects to sustain the growth. In Guthrie, US, the new automotive finishing line has shipped its first customer coils in December. At Changzhou, China, the automotive finishing line is under qualification, and the first commercial shipments are to begin in the current quarter. At Pinda, Brazil, the rolling expansion is on track and expected to be commissioned in mid-next financial year. Novelis recently entered into the Alu Mobility Partnership to make mobility more sustainable going forward. On slide 17, you can see the comparative financial performance trends of Novelis reflecting its best ever quarterly performance in terms of revenue, EBITDA, and EBITDA per ton on the back of high volumes, cost control, product mix, and addition of the acquired LRS business. Slide 19 shows the details of the performance of Indian aluminum business segment. The aluminum metal production was higher by 3% sequentially at 315 KT. In line with sharp recovery in the market, the production of downstream products was higher by 37% sequentially at 84 KT in this quarter. However, alumina production was sequentially lower at 675 KT due to a maintenance shutdown at Utkal refinery. On sales front, the share of domestic sales has reached 41% in this quarter compared to 36% in the previous quarter. Similarly, VAP sales as a percentage to total metal sales has improved to 25% in this quarter versus 21% in the previous quarter, reflecting a sharp recovery of the VAP market sequentially. Moving on to the financial performance of the Indian aluminum business on slide 20, the segment posted revenue of 5,294 crores in this quarter, reflecting a growth of 11% sequentially on account of higher global aluminum prices. EBITDA was up 24% sequentially at 1323 crores on account of favorable macros and sustained low input costs. The EBITDA margin in this quarter continues to be one of the best in the industry at a healthy 25% of revenues, up 276 basis points sequentially. Moving to slide 22, the overall copper metal production was at 51,000 tons in this quarter, lower sequentially due to planned maintenance shutdown during this quarter. However, production and sales of CC rods were higher by 2% at 67 KT and 65 KT respectively in this quarter. The financial performance of copper segment is on slide 23. Revenues were up 8% sequentially at 6,133 crores because of higher LME. EBITDA was maintained sequentially at 202 crores in this quarter. Let's turn to our consolidated financial numbers for quarter 3 on FY21 on slide 25. Hindalco reported an outstanding consolidated financial performance with revenues of 34,958 crores and business EBITDA of 5,242 crores, both up 12% sequentially. Before exceptional and special items, PBT and PAT for continuing operations were up 26% and 21% sequentially at 3,153 crores and 2,166 crores respectively. The detailed quarterly comparative financial numbers are attached as an annexure to this presentation on slide 33. Similarly, the Indian business of Hindalco also reported a remarkable performance in this quarter with revenues of 11,425 crores and business EBITDA of 1,528 crores, both up around 20%, and profit after tax of 495 crores, up 51% sequentially in Q3 FY21. These details are provided as an annexure to this presentation on slide 35. Slide 26 shows the reduction of over 12,000 crores in our consolidated gross debt and of 8,500 crores in our consolidated net debt from June 20 levels. This, along with increasing EBITDA, has led to a substantial improvement in the net debt to EBITDA ratio from a peak of 3.83 times in June 20 to 3.09 times at the end of December 20. Let me now hand over this call back to Satish to give you a perspective on our sustainability updates in a summary.
So coming to our sustainability updates on slide 28, as I had covered in my opening remarks, we are proud to announce that Hindalco has been recognized as the most sustainable aluminium company in the Dow Jones Sustainability Index based on its S&P Global CSA score of 2020. We have scored in the 100th percentile in most of the aspects in all three dimensions of sustainability metrics. Hindalco has achieved 75 points against an industry average of 51 points in 2020, which includes 61 industries in the DJSI. To add to this, also an improvement on our ESG ratings in the MSCI index, where Hindalco has moved one notch higher this year to the BBB rating from BB. This reflects our commitment to ESG. Coming to slide 21, I would also like to share Hindalco's progress across the various sustainability metrics and trends over the last 4 years. In year-to-date FY21, the LTIFR was at 0.44, water consumption was at 53.6 million meter cube, while recycled water was at 12.2 million meter cube, reflecting continuous improvements in all these metrics over the years. The bauxite residue recycled was at 62%, and specific energy consumption in aluminium was at 85% from the base year of FY19. We have also been continuously upgrading our safety programs to meet international standards and provide the safest atmosphere for all our employees. Coming to the environment, Hindalco has achieved zero liquid discharge at 11 out of its 15 plant locations, with a target of increasing the ZLD to one site per year to reach 100% zero liquid discharge at all its locations in India. On water consumption, we are targeting a 5% reduction year on year with FY18 as a base. On waste recycle, in terms of all waste, including bulk waste such as fly ash and bauxite residue, we are committed to 100% recycling and reducing the landfill by 5% year on year. On the renewable energy front, we are in line to reach our target of 100 megawatt capacity by FY22. As a step towards reducing carbon footprint, we are also converting our oil-fired furnaces with natural gas at all our locations. Novelis has already covered its sustainability metrics and trends in their Q3 earnings presentation last week. On slide 31, let me conclude today's presentation and try to summarize our performance in the third quarter and our broad key focus areas. We delivered yet another record performance across all our segments as we are catching up with the sharp recovery of markets, supported by improved macros and better efficiency. The cost competitiveness of Hindalco smelters continues to position it in the first quartile of the global cost curve. The capacity expansion at Utkal Alumina Refinery by the end of this year will further reduce the overall integrated cost of production and will ensure future competitive readiness. We continue to strengthen our balance sheet with robust cash generation while accelerating the pace of deleveraging. The Aleris integration is also providing accelerated synergistic benefits, and we shall unlock and capture the entire value of this acquisition and reach our target of 185 million worth synergies and 370 million EBITDA in the next 3 years. We are fine-tuning our capital allocation framework in light of the improved business outlooks across all our business segments and intend to present this in an investor meet which we shall be holding in a couple of weeks. This framework will provide direction on intended use of free cash flow, on growth capex, management of net leverage within targeted range, and distribution to shareholders. Another important area where Hindalco has done remarkably well over the last few years is on ESG. The most recent example is the recent improvement in DJSI ranking, where we reached the number 1 and are recognized as an industry leader globally. We shall continue to strive on our 3R model of sustainability in Hindalco with the focus of shaping a sustainable world together. Our vision and strategy is to continue being a global leader in the downstream value-added products, driven by our India downstream capacity expansions, product innovation, complete digitalization, and organic expansions in Novelis. and a diversified product mix. Thank you very much for your attention, and this forum is now open for any questions you may have.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Amit Dixit from Edelweiss. Please go ahead.
Thanks for taking my question, sir, and congratulations for a good set of numbers. I have 2 questions. The first one is on aluminum production. So if you see YOY, the production is down. In fact, every month in Q3, we saw production declining YOY. Any specific reason for that? Is it due to some plant maintenance or something?
No, actually what happened, Amit, was that during the COVID times, we could not, the pots have a life cycle. And as the pots, in our terminology, die, we reline them and bring them back. We could not do the relining during the COVID quarters because normally it's done with a lot of contract labor. So that pace has picked up now. So, we are at about 315 levels versus 320, so we will be getting back there by the next 3-4 months as we start to bring back pots online.
Okay, that is helpful. The second question is again on copper. So copper, while we saw that production was down, but your sales were much higher than production. Some of it might be due to tolling that you might have done for both CC rod as well as the metal. So since we have seen that imports have come down, so even if when your copper production improves, is tolling going to be the way forward if it is there?
See, in copper business, there are many variables which play along, and we use a very agile strategy in terms of how to keep our market customers satisfied. Since we are the market leaders in the country today, we also see this as a major responsibility on our part. So even if our smelters, for example, go through a planned shutdown, we make sure that we have either by way of anodes, which we can use in our refinery, or we have cathodes procured locally or imported, such that we are able to supply the rods to our customers. So that is how we try to maintain our sales, even when smelter production is down.
Okay, so one follow-up question on this. So, what would be your overall, guidance for production in copper in this quarter?
We don't give guidance quarter-wise, but what I can tell you is that in January the smelters have run smoothly, and we expect the same to continue in this quarter. We have planned a shutdown for our other smelter. So in October, November, we had smelter 1 coming under shutdown, and from 15th of March till about 15th of May, there will be a shutdown of smelter 3, which is the bigger smelter for us. But that we don't expect to impact our sales, as I mentioned, because we follow this agile strategy of organizing material much in advance. These are planned shutdowns, so nothing comes as a surprise.
Okay, fair enough. Thank you, and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Yeah, thank you very much. Good afternoon, everyone. It is very interesting and exciting to see that the company is now ready to come out with formal capital allocation and growth capital expenditure plan. In that context, sir, what I would like to understand is that if we take spot EBITDA of roughly 22,000 crores, Hindalco's net debt to EBITDA is just over 2.5x, and hence the company has a lot of flex. What we would like to understand is that when the company frames its capital expenditure policy, does it look on a consolidated basis, or does it take a view across standalone and Novelis separately? And secondly, while the company has spoken about downstream aluminum capex in India, we have not really heard much on copper smelting and aluminum smelters. And we have seen, competitors, filing approvals, to get approvals for expansion plans in copper smelting and aluminum smelters. Adani asked for approvals for a 1 million ton copper smelter, and Vedanta asked for a 0.2 million expansion aluminum. So, sir, we would like to understand how does management see growth optionalities across each of its businesses?
So the first part of your question, Pinakin, I think just if you hang on for a couple of weeks, we'll come out with the capital allocation.
Sure, sir.
The growth capex for Novelis will be from Novelis's cash flow, and the growth capex for Hindalco will be from Hindalco cash flows. There'll be no sort of cross movement for growth capex. Once you finish the growth capex, the second part, which is the deleveraging, also will be Novelis, and a large part of the deleveraging will happen the reducing of the net debt will happen mostly from the Novelis point of view. I think finally when it comes down to return for the shareholders, well, there's only one set of shareholders for Hindalco and Novelis combined. So that's where it will all come together. But I recommend that if you give us 2 weeks when we articulate our capital allocation strategy, you will get a lot more details. Now, coming to the second part of your questions, I don't think you will hear me talking about aluminium smelter or copper smelter.
Understood. So that is very clear. And lastly, sir, just a color on how costs are trending in the aluminum business. Are we behind the cost tailwinds in coal, or should we see coal costs remain depressed for the aluminum segment?
So in Q3, if you remember when we did the Q2 earnings call, I think I had said that our costs could go up in Q3 by 1 or 2%. Actually, they are flat. And I think that our procurement team had been procuring quite early, and that sort of benefited us in Q3 because our cost of production is flat. Now, I think, the input costs are going up. CP, coke, pitch, all are up by nearly 20%. And the coal premiums have also gone up. So Q4, we will see our cost of production rising. And I think that we should see roughly about 3% increase in Q4.
Understood, sir. Thank you very much.
Thanks, Pinakin.
Thank you. The next question is from the line of Indrajit Agarwal from CLSA. Please go ahead.
Hi, sir. Congratulations on good set of numbers, and thank you for the opportunity. I have a couple of questions. First, on the copper business. So, are we getting any sense on calendar 21 TCRC margins, where they are settling at? What are the kind of negotiations that are going on?
Yeah, calendar 21 is already announced, which is at 59.5. So this is 4% lower than the previous calendar. And yes, copper business from that point of view, low TCRC is an impact. But on the other hand, sulfuric acid prices have gone up. DAP has been good last year. We don't know what's going to happen next year, but some of the other factors have helped us go through it. Plus the higher LME, while it's an offset model, but at the end there is some positive impact coming from the higher LME as well, because our pricing is linked to that in some sense.
Sure. Second, on Utkal refinery, what is the update on the commissioning?
So we should finish the commissioning in Q1 of next year. So by June we should be up and running.
And any indication on what kind of cost savings it can give? Because I assume you will not be selling alumina out of this extent. You will mothball one of the Renukoot smelter refineries, right? So what is the kind of cost saving we can see from this?
So our current thinking is that we will still be running Muri and maybe one of the lines of Renukoot. So we won't completely shut down Renukoot in year number 1. So we will use some part of the production for Renukoot, and probably in Q4 of next year do some third-party sale as well. So it's going to be a mix of both. The Utkal costs of alumina are nearly half of what the other refineries are. So you can back calculate the saving.
That helps. And two housekeeping questions. Can you help with the standalone gross and net debt?
Standalone meaning Hindalco India?
Yeah, India will also do.
Yeah, I think India, the gross debt was 24,464 crores and the net is 14,874 crores. Is that correct?
Yeah.
Yeah.
And the usual hedge position?
It has not changed. I wish it's still the same 58% at 17.15.
And anything on FY22, how much are we hedged?
So we are hedged 28% at 1840.
Okay, that's helpful. Thank you so much for answering the questions.
Yeah.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. So first question is with respect to the coal mix. Can you share what is the current run rate, and say next year will our dependence on outside purchase, e-auction, etc. will end, and maybe we might see some further benefits on the coal cost front?
Not really. I think, see, currently in Q3 we were 76% linkage, 22% e-auction. So I think that this trend will continue because our own mines, we will do a little bit more production, but not much. And I think on the coal side, we don't expect coal prices to dramatically go up because there is adequate supply. But I think the prices we saw in Q2 and Q3 were probably the bottom. So there will be some coal price inflation.
Understood. Mr. Pai, the second question is with respect to the future growth plans. Now you touched upon this on the previous question, but just to get some more color, see in the past we've grown both organic, inorganic and also upstream and downstream. Is it fair to assume that in future, given the size now, the growth will come largely inwards than organic, and also it will be only downstream and not upstream? Are these two a fair assumption over the next 3 to 4 years?
Yes, the fair assumptions.
Understood. Thank you so much, sir, and all the best.
Yeah, thanks, Sumangal.
Thank you. The next question is from the line of Amit Murarka from Motilal Oswal. Please go ahead.
Yeah, hi. Good afternoon. So I just wanted to check on the downstream announcement which you had made, so 730 crores at Silvassa. So, what will be the pace of such downstream projects which you'll keep announcing given the cash flows are strong? And how do we think about the margins in this business?
So the extrusion business, the margins are quite strong. I mean, if you remember, overall downstream we had guided that we'll do $150 per ton EBITDA. The extrusion margins are higher than that average. So the Silvassa extrusion project, which is 730 crores we announced, I think in the next couple of months we'll announce the expansion of the FRP in Hirakud as well. And we also have a smaller expansion of the specialty chemicals business that we'll be announcing. So these are the three things in our pipeline that will come out in a staged manner now. But as I keep repeating, all these will be within the cash flows generated in India.
So, also, in this budget, we saw the government actually reduce the import duty on copper, while you guys have been advocating for a raise in duty. On the scrap side, I mean. So, how do you see this situation now?
So copper scrap duty is reduced from 5% to 2.5%, and this does encourage the import of copper scrap. However, there are countermeasures as well, which is like import monitoring system will be in place. It is under implementation at this point of time. There are also standards which are coming up with respect to the usage of scrap for copper scrap for specific applications. So we presume that while this initiative by the government is to promote the MSMEs who can live on copper scrap, there might be some impact in terms of pricing. We have yet to understand and estimate what impact it will have. There is no immediate or short-term impact, but yes, in the longer run, we'll have to assess and see how we can either participate in this side of the industry, or how do we counter it.
And on aluminium, would you or expect any such measures in the future then?
So the import monitoring cell that Praveen was talking about is being put across aluminium and copper. The coal ministry, by the way, has already implemented it, and steel were the ones who did it nearly 6 to 9 months ago. So the way the system works is all importers have to register with the ministry and have to give an end-use certificate. So I think that along with the standards, this will make sure that the market segments that are correct do not get impacted by scrap. I mean, like in copper, the industry is very worried if transformer cables, etc., the scrap gets used where it should not be. And in Hindalco for aluminium, we are worried about cookware and all that where the scrap should not go. So these are a couple of the things that the import monitoring cell will focus on.
Okay, sure. Thank you.
Thank you.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead. The line for Ritesh Shah has dropped. We take the next question from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good evening, sir. So, sir, I just had a couple of questions. One is on the outlook for aluminiums. So with the Chinese, after the Chinese Lunar New Year holidays, do you expect the momentum that has been there in aluminium prices to sustain, given that, we're still looking at a global surplus situation and inventories also have probably been stable or are, gradually rising?
So look, the period before the Chinese New Year right now is the time where aluminium prices should be the weakest. Actually now LME is running at 2075. So I think that the supply and demand is tight, and as I explained to you in my prepared remarks, majority of the surplus came in calendar year Q1 and Q2. Since that point, the surplus has been minimal. So the market is now extremely tight. So we do believe that the momentum of economic growth in China is not going to slow down. With the US stimulus, we think that the US economy will also do well. The Indian economy is also doing well. So we don't see a demand problem, and we think that the commodity prices should hold.
Sure. Okay. Also, in the budget, there is also reduction in gold and silver customs duties. So is that just a pure pass-through, or do we get some benefit from the higher duties in our copper business?
Our main business is copper and the sulfuric acid and DAP, etc. Gold and silver actually come as more like an impurity for us in the copper concentrate, which we have to deal with. So it's a smaller portion of our business.
Okay, so this really should not really impact on a material way our copper profit.
On a console basis, there is any impact, I would say.
Sure, sir. Then finally, copper, on an annualized basis, we used to be at a run rate of close to, 1,000 crores to 1,500 crores per annum. Now the 9-month performance, it's only about 450 crores, And if I keep Q4 flat, we'll probably end with 650, 700 crores. So the TCRC is also lower. Do you expect that structurally there's been a reduction in the profitability base for copper, or do you expect that we can, revert to 1,000 crores or higher than that at some point of time?
No, we surely expect this to go up. See, this year has been a very special year. Particularly COVID-related disruptions have been more prominent in copper business. Unlike aluminum, where smelting lines are many, so you have thousands of pots running, and you can always reduce the current and take a few pots out. In copper, you just have 2 big smelters, and it's a continuous process where end-to-end process has to run for us to be able to make copper anodes and then cathodes. So in Q1, if you recollect, the biggest impact was in Q1. Right now, it's not such a big impact. In Q2 and Q3, it's not so big. Q1 was a complete washout for us, and that is what has impacted us largely in this year. As I mentioned earlier, there are 2 shutdowns which have been planned. One has been done successfully of both the smelters. So one is already over. It's behind us. and the smelter is running fine. And the second one, which is planned in between March and May, I think after that, the operational performance also will improve significantly, and we hope to see better levels than current levels going forward. You asked about TCRC. Yes, that's a cyclical factor for us, and we again look at many ways of compensating that. As I mentioned, to some extent, it gets compensated by higher LME and our dominance in the market. We also look at opportunities where we can enhance, even if we are not smelting ourselves, in terms of various trading opportunities or tolling opportunities. So there are many value drivers in this business. Sulfuric acid, I mentioned another one, fertilizers, the other one. So it's not one particular driver. So certain things go up, certain things go down. We hope to get back to the same levels again.
Sure, sir. Thank you so much.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Noel Vaz from Ashika Stock Broking. Please go ahead.
Hello, sir. Good evening. Just one question. Most of my questions have already been answered, but regarding the recent announcement of the auto scrappage policy, what kind does Hindalco expect some kind of a positive impact for the aluminium sector? And if so, how is the company aiming to take advantage of it?
So, a large part of our aluminium actually goes in the commercial vehicles, which is trucks, bulkers, trailers. And we think that the scrappage policy will be mostly or initially a lot used in that sector. So we are actually quite anticipating a bigger demand of aluminium because of this scrappage policy, especially in this commercial vehicle segment. So that is where a lot of our aluminium goes today.
So approximately, I mean, how much of aluminium usage is used by the commercial vehicles right now? I mean, if you were to get a ballpark estimate.
I can't give you a sector-wise aluminium usage there, but I think that all I can tell you is that with this scrappage policy, the consumption of aluminium in the auto sector is going to go up.
Okay, that is all. Yeah, thank you.
Thank you.
Thank you. The next question is from the line of Kamlesh Jain from Prabhudas Lilladher. Please go ahead.
Yeah, thanks for the opportunity, sir. So one question on the part of, like so you had highlighted that in a 2 weeks time you will come out with a proper capex policy, capital allocation policy. So on that front, like say, though I'm taking it out, sir, what would be the capex in Indian operations going forward? Are we going that 2,000 crore capex run rate for next couple of years, or is it going to accentuate further from the earlier run rate which we had been maintaining?
So look, as I told you, that depending on the cash generation on India, taking into account, as I said, that we don't have a plan to reduce the gross debt in India at this stage. Large part of the cash generated in India we will be using for growth capex. So I think that just like we announced Silvassa, we'll be announcing the FRP, and I think that you will see that it's difficult for me to just give you a average capex over the next few years, but depending on our cash generation, the capex levels will go up. Last year we had the 2,200 plan and we went down to 1,500 because of COVID. I think you'll be seeing a 2,000 plus, but I will give you that guidance once we have finalized our plans.
And so lastly, are we looking at any investments related to like the PLI scheme? Would that be in consideration? That,
what? Sorry, what scheme?
That production linked scheme and which have been announced by the government.
Yeah, those are more where you are B2C type of customers. So for us, there is no sector where we will get it. We are actually waiting for the RODTP to be announced, because if you remember, from an export incentive, the MEIS was removed and the RODTP scheme has been notified from 1st January. But the percentage of return that we will get for exporting has not been communicated yet. So we are actually waiting for that. That will have a benefit because 50-55% we export.
Okay, so the FRP and all those product segments which we are expected to announce or to work on, would be majorly focused on the exports part?
No, see, let me be clear. The FRP and the extrusion that we are working on is largely for the domestic market to do import substitution. When we export, it's largely ingot, primary aluminum. So most of our downstream that we are working on is for the Indian market where the demand is growing up, and we are doing a lot of import substitution projects.
Great, sir. Thanks a lot.
Yeah, thank you.
Thank you. The next question is from the line of Vivek Ramakrishnan from DSP. Please go ahead.
Hi. This is again the question on the debt levels. So, Mr. Pai, about a couple of quarters ago in the call, you had mentioned that in the domestic aluminum business, the absolute level of debt is important, and that your target is to bring down the long-term debt, that is excluding the working capital debt, to about 12,000 crores. Does it still stand? Because you were talking about a higher gross debt number now.
Yeah, no, I was not talking about higher gross debt. I said that, largely the deleveraging focus that we are going to announce will be focused on Novelis. Reducing 1,000 to, we are at about, our long-term debt, net debt in India is around 14,000 crores. So reducing another 2,000 crores is, we could do it. It's neither here or there. I think from a capital allocation, what we are saying is that we will delever on the Novelis side more. We have no intention of adding any debt in India.
Okay, great. Thank you very much.
Yeah.
Thank you. The next question is from the line of Satyajit Jain from Ambit Capital. Please go ahead. Satyajit Jain from Ambit Capital, your line is unmuted. Please unmute the line from your side and go ahead.
Hi, am I audible?
Yes, you are. Thank you.
Yes, thank you so much for the opportunity. Most of my questions have been answered. Just one question on ESG, on the entire green aluminum drive globally. So Rio Tinto and other producers have come up with an initiative, a label called STAR to track the carbon footprint and other criteria. So with Hindalco, there's always that dichotomy that Novelis has extremely good sustainability metrics, but the source of power for smelting in India has always been a challenge, and some of these labels will track these metrics, right? So how, as you look at your capital allocation plan, the growth strategy, evaluate all of that, how do you think of addressing some of these challenges that ESG investors may be grappling with when they look at Hindalco?
So as you quite rightfully put off on the Novelis side, because of the recycling, we'll be well. But the way we position Hindalco as a consolidated, which is what I tried to do in today's presentation, and which is an approach that the Dow Jones, MSCI, all have taken, is that it's not just the carbon. ESG stands for environment, safety and governance. So we are quite right that we are on the back foot in India when it comes to the source of power. But there are so many other parts where we intend to be world leaders. And that's how we are going to position ourselves. And the number two thing is that in India itself, as I told you, we are going to increase the usage of natural gas and solar. And we'll try to bring it down as much as we can. But can I ever become zero carbon in smelting in India? The answer is no. And we know that. So which is why when we talk about green aluminium, or even if you look at Rio Tinto, what they have announced is a lot more sectors. They talk about red mud, they talk about biodiversity, water, all of those are taken into account. So I think the challenge is to get the investor to understand a holistic environment sustainability policy. And that is what Hindalco is sort of taking the pressure and the lead in doing.
Okay, thank you so much.
Yeah.
Thank you. The next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. Question is on your consolidated net debt position. So on a sequential basis, we can see almost 4,500 crores of net debt reduction, as against a consolidated EBITDA that I can see of around 5,100 crores. So can you sort of create a broad bridge as to how
this was achieved, and any working capital impact or benefit that you would have seen, any other benefit that would have helped this number?
No, I mean, really speaking, it's largely internal cash flows. We are seeing in line with the EBITDA generation, obviously the cash flows have been pretty strong. There is a very focused attention on the working capital management as well. CapEx has been under control, so all that is resulting into better cash flows. I would simply put it that way. And of course, part of it is helped by the divestiture as well. We got Lewisport divestiture was done in this quarter, so that has helped. So really speaking, it's a mix of all things, but operational improvement and cash flows is one major factor which we intend to continue.
But I think, Dave, why don't you chip in and tell about the actual debt reduction that Novelis did in Q3, Dave?
Yes, absolutely. So we reduced debt by about 700 million in Q3, and there was a mix of factors. One was we got the divestiture proceeds of Lewisport during the quarter. We had received the Duffel proceeds right on the borderline on September 30th, so we were holding that cash ready to pay down debt. So essentially, if I broadly tell you about 500 million rounded, I'm just rounding numbers, is coming from all the divestiture proceeds, and the rest is coming from
cash flow.
Other internal cash. So that's really the way we have brought down 700 million.
Got it. Two questions more from my side. One, what has been the consolidated capex for 9 months and for the quarter? And second is, in your India operations, Hindalco India operations, the depreciation has come down from around 640 crores to around 497 crores on a sequential basis. So any reason that you would sort of ascribe to that?
So maybe I can take the India part to begin with. The second question, basically last quarter we had an impairment of one of our mines. So that had inflated the depreciation and impairment number. Otherwise, they are in line with each other. And on the capex, we are in India, we are at about 1150 crores or so for the first 9 months.
Dave, Novelis first 9 months capex?
Novelis first 9 months capex, I have to just take a couple of moments. Can you just move on?
That data is available actually in the public domain. So thanks for this India number. That's all from my side. Yeah.
Great, thank you.
Thank you.
The number is 333, by the way, YTD. Sorry, just took me a moment.
Yeah, sure. Thanks.
Thank you. Ladies and gentlemen, we take the last question from the line of Ritesh Shah from Investec. Please go ahead.
Hi, thanks for the opportunity. Apologies, got disconnected earlier. Just had 2 questions. One is, how has been the transformation or transition from MEIS to RODTEP? Have the rates been already notified? How are we baking it in our P&L at right now? That's the first question.
So I think I said in the earlier question, the MEIS got taken out somewhere in Q2, 1st September. And since then, we have not had any MEIS benefit. The RODTP has been notified from 1st January, but the percentage that they'll give, MEIS was roughly 2% we were getting. So we are expecting RODTP to come up at least at 2, if not more. But that they will do, and then it will be retrospectively applied from 1st January of 2021.
That's useful. My second question is a bit hypothetical, Mr. Pai. Do you see a day in India probably emerge wherein you will be substituting coal with gas with some policy action? Do you see something of this sort being actually viable in the country, or government doing something about it, or have you heard about any potential pipelines being laid off? And it is something which might come to use, and something of the sort being a possibility?
So it's not hypothetical. In fact, in the Jharsuguda area, the gas pipeline is being laid. COVID delayed it by about a year. And our plan is to make all our boilers dual fired, meaning part coal, part gas. So we intend to be the first ones to immediately do that. In fact, an interesting statistics we have told MOPNG that if they can get gas landed in India at about at our plants at about $5 an MMBTU, then you can actually start to substitute coal. So that discussion is quite actively ongoing. The problem, as you realize, is that gas will be imported. Domestically, we have not got enough gas yet.
Okay. Sir, you said $5 per MMBTU at the plant.
Yes.
And
Today, by the way, this year we were buying at about 8 to 9.
Right. Right. But sir, is there willingness from the government to step in and make something of the sort possible, like to bear the cost, to decarbonize the industry, something of that sort?
So I think there is, there are different parts of the government that look at it differently. But yes, there is, because as you know, Prime Minister Modi has made commitments for the reduction of carbon. So that discussion today is largely on adding more solar capacity. But as you know, solar will not help to decarbonize industry in a big way. So this discussion of gas, at least from my side, I am actually putting it on the table more.
That's very useful, and look forward to hear more on this subject going forward. Thank you so much for the answers.
Yeah, thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
So yeah, I just would like to thank everyone. I think that this Q3 is where we are generally feeling we are back from the COVID related issues that happened in Q1, Q2. And we think that going forward, there has been a good recovery in demand. The macros are looking strong, and we are operationally a lot more efficient now. So we think that, the next year for Hindalco Novelis is going to be a good year. And we also look forward to articulating our capital allocation policy, which we think will be important in the coming weeks. So thank you so much for your attention.
Thank you very much, sir.
Thank you.
Ladies and gentlemen, on behalf of Hindalco Industries Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.